All right, hello, and welcome to Camel Finance. I'm your boy Camel, and in today's episode, I've got a little bit of cryptocurrency news for you, some CBDC stuff I want to touch on because we've had some interesting developments there, particularly here in the UK. The Fed speak yesterday, I want to go over that, and ultimately, the Fed seems to have lost all credibility. It doesn't matter what he says anymore. Markets are front running this pause. I want to talk a little bit about inflation expectations ahead of Friday's inflation data, and then we got charts, TA, live trades, and all that good stuff. So if that sounds like something you're interested in, sit back, relax, hit that like button, and let's get into this. The Super Bowl has banned cryptocurrency television commercials. So yeah, read into that what you will. I don't think that makes much difference, to be honest. MasterCard CEO has said that they think they're going to have a world where everything will be tokenized and it will be passed around in safe fashion. And this ultimately is likely the goal, isn't it? The tokenization of everything. Cryptocurrency exchanges have immediately responded with donations for Turkey and Syria after the devastating earthquakes. Versus Goldman Sachs, JP Morgan, Citi, Barclays, all the rest of them, they do absolutely nothing, of course. Guess which group takes government bailouts? Of course, it's the latter, not the former. And this really speaks volumes to how the cryptocurrency industry is really much more sensitive and compassionate towards humanity. The people in the cryptocurrency industry, generally speaking, want the best for humanity. They are advocates of freedom, of decentralization, versus, of course, the old traditional financial system, the banks, who just want to keep all the money for themselves and to enforce an increasingly more tyrannical future on the masses. Speaking of an increasingly more tyrannical future, yesterday the Bank of England and the Treasury have published a consultation paper on the digital pound, the UK central bank digital currency. Find out more here. So you can scroll through this in your own time. I'm not going to go through this because I've spent an awful lot of time covering CBDCs on this channel. However, I just wanted to point at something and remind a group of people. There's a group of people out there that say things like, yeah, well, it will never happen here. Don't fall into this trap. As I've been saying all along, it can and it will happen here. The UK CBDC will have an expiry date to prevent saving. Bitcoin is, of course, the exit. You can see here, hoarding Britcoin will be banned over bank run fears. And if you dive into this a little bit more, what you'll find out is initially they're proposing a limit of holding £10,000 to £20,000 per person for this digital pound, the CBDC. But of course, the question is how long before this £10,000 to £20,000 becomes £1,000 to £2,000? I have shown time and time again on this channel, all of these CBDCs all around the world are all being built under similar guidelines. They all have expiration dates built into them, which means they can force you to spend your money or lose it. And again, if you don't think that can happen here, if you don't think this is possible, if you don't think that, you know, they'll get away with this in the UK, then I encourage you to go onto my channel, search for CBDC and watch any of these videos. I've got plenty of them. You can see here this one about Nigeria where Bitcoin is actually the exit to the system. These other ones all show you in various amounts of detail just how dystopian and tyrannical these CBDCs really are. They're going to be linked with digital IDs, so if you don't know about all of this stuff already, I encourage you to go and watch all of these. There's absolutely loads of content I've done on, including UBI, CBDCs and social credit scores. So anyway, that's all there. There's loads of content. You can go and check that out if you're unfamiliar, but don't make the mistake of saying it will never happen here. It is happening here. Our current Prime Minister, his father-in-law, owns the digital ID software company, who, by the way, works with one of our ex-prime ministers, Tony Blair, okay? All pushing the same sort of thing. So don't make this mistake of saying it will never happen here. This week continues to shape up to be an interesting week. Yesterday, the Fed's chair, Powell, has spoken. I'm going to go through that in just a moment. We have, of course, unemployment claims coming out on Thursday and the inflation expectations and consumer sentiment coming out on Friday. So let's do Powell first, okay? Look, Powell has simply not been clear enough. If he wanted to, he could kill the market, but he's not being clear on his policy on purpose. He knows inflation is coming down on its own, so keeping the market afloat is the soft landing that he wants. Remember, there's likely not going to be a soft landing, and I've been saying this over and over again. We will see this soft landing narrative come out. We will see this narrative of, oh, the Fed managed to engineer a soft landing. We narrowly avoided a recession. But understand this, that's not what's going on here. What's going on here is we are moving from a disinflationary period into deflation. And as the pendulum swings from one extreme to the other, there's a Goldilocks zone in the middle where everything looks okay. It looks like at the moment inflation is coming off. There's a good chance we're going to be able to engineer a soft landing. We apparently have avoided recession. There's this Goldilocks zone in the middle where markets can rally. But remember, we're not too far away after this rally completes for the pendulum to completely swing to the other extreme, which is deflation, the biggest deflationary bust since 1929. We just so happen to be in this Goldilocks zone at the moment. The market doesn't care what Powell says. And remember, humans make the same emotional mistakes time and time again. They were talking about the soft landing in 2007. Look at this right here. Fed chairman projects soft landing for the US economy. This was in February of 2007. Of course, you know what happened next, and that was the great financial crisis of 2008. So there's always this time in the middle, this Goldilocks zone where everything looks okay. Remember, if you go from boiling hot to freezing cold, there's a period in the middle which is comfortable. And here we are today, again, the world's economy soft landing hopes boosted as 2023 begins. So it's the same mistake. Don't make the mistake of thinking there's going to be a soft landing. It's just a Goldilocks period in the middle where everything looks like it might be okay. And so, as per the thumbnail today, the market no longer believes what Powell is saying. Powell has lost all credibility, and as far as the market is concerned, the Fed has done hiking rates. Rate cuts and QE are coming very soon. The play right now is to dump the dollar and buy risk assets. Powell also said that he expects 2023 to be a year of significant declines in inflation. So looking out to Friday, does that mean we can expect to see inflation start to come down quite strongly, quite significantly? Well, according to ISM Services and Consumer Price, yes it does. So you can see the ISM in red here, coming down significantly ahead of CPI. So is CPI going to catch this up? Quite possibly. In addition to this, supply chains are easing, which adds fuel to the disinflation process. Freight rates right now are down over 80% from the 2021 peak, as you can see here. Here is rent inflation. Year over year should start to come down very soon. As you can see, there's a massive lag between the two, but it should, in theory, only be a matter of time before these metrics start to catch up. On the flip side of this, we've got lumber up 40% this month. I've said before, this can be a double-edged sword. This could be something that's about to skew the inflation metric to the upside, or it could be a sign that the economy is not actually doing it too badly. Lumber is used to build things. Lumber is used as fuel. It could be a sign of increased demand, or it could be the CPI metric about to be skewed to the upside. That remains to be seen. Something else we need to keep an eye on, CPI month-over-month gasoline price, as you can see here. Big spike. So it might not be as plain sailing as we thought. I've been saying over and over again, especially over the last couple of weeks, that I actually expect month-over-month CPI could be a little bit higher. I think year-over-year CPI is likely to come down. Either way, we'll learn something on Friday. One thing I'm sure all of us can empathize with is food price inflation. This has just soared to a new record of 16.3%, and this is a trend that we're seeing worldwide. Regardless of the expectations on Friday, regardless of the data, the facts are the facts, okay? This whole idea that the Fed has a 2% inflation target and it's not negotiable. But remember, they continuously update the components within that CPI basket. If you keep moving the goalpost, you will eventually score. And you can see here, starting with January 2023 data, the BLS plans to update the weights annually for the consumer price index based on a single calendar year of data, using consumer expenditure data from 2021. This reflects a change from prior practice of updating weights biannually using 2 years of expenditure data. So what does this mean in layman's terms? In layman's terms, this means that when things like lumber and oil and gasoline and food continue to spike to the upside, they can just decide to pull these components from the CPI in order to fudge the data, to make the data read a printout that they want to see. So, hopping into some charts, here we go, dollar back testing. It looks to have recovered this line, doesn't it? It looks to have recovered this blue upward sloping trend line from back here. So we had this breakdown, a quick recovery, and now we're sort of back testing it again. How this will turn out is anybody's guess at the moment. But if we look at other risk assets are kind of hinting that we're going to see this thing roll over, and we're going to roll over quite sharply. Now, that's not a prediction, but that is simply by looking at the risk assets, such as the US equity markets. You can see here, look, perfect bounce off of this orange trend line. So that continues to upset the bears. NASDAQ as well continues to pump, as you can see. Dow Jones working its way up towards the top of this range again, as we've long suspected that it might. So again, doesn't really speak to breakdown. VIX continues to be contained under this red line, doesn't it? So no spike in the VIX, no volatility event, no stock market crash on the horizon at the moment. Flipping into the UK 100, here you go, the FTSE 100 continues to march on, continues to make new highs. Again, not the sort of thing you see from a bear market rally. Seeing things like Tesla stock continue to push up, so not much more to say about that. Apple as well, despite bad earnings. Look at Apple go, okay? This would have been a great trade if you took it when I called it out. I openly stated that I already had enough equity exposure, so wasn't taking this trade, but you can see that Apple would have been a good trade to take as well. Still sidelined for the precious metals, not trying to rush in here. The thing I would love to see, and I'll leave this drawing here, I would love to see like a pump up here that rolls over, perhaps does something like this. And then what we will be able to do is draw a trend line connecting these highs wherever they form, and we'll buy the breakout from down here, like this. This is what I would love to see. And I would also love to see this exact same setup from silver. So here's silver. I think if we could get a nice little shake like this, something that does this and then breaks out, then we could draw a nice trend line, something like this, and then long that breakout from down here. This is what I would love to see. So whether we get it or not is a completely different kettle of fish, isn't it? It's a completely different question. I have no idea what the market's going to do. Nobody does. But if this is the sort of thing that can set up, then these are very, very high probability trades. As it stands, I currently remain sidelined, waiting to see what happens from the precious metals. But if we can get one of these sorts of setups, then these will be a very, very high probability setup to take. Bitcoin, still doing Bitcoin things, isn't it? If I hop into this fractal chart, this thing makes me laugh every time because it seemed so absurd when we got to down here and I first copy and pasted it on. People thought this was absolutely nuts. But here we are, still kind of following it. Still no sign of a breakdown from Bitcoin. So not much more to say about that apart from long and strong continue to push. We do know there is a cycle low, 60-day cycle low due at around the 27th of February. So if we don't get going to the upside in the near future, then it's likely we will just start to expect a drop into the end of this month. But either way, I don't think that's a problem because it will likely resolve to the upside following that cycle low formation at the end of this month. Here's the yields. Look, are the yields about to make a breakout retest resumption? Is this going to pressure the risk assets, or are these going to do what I think they're going to do, which is perhaps a little bull trap and then roll over sharply and break down as risk comes on massively? I think so. Of course, that remains to be seen. The 2-year yield as well, if I reset this, is this going to be a retest and resumption higher, or is this going to do what I think it's going to do, which is sort of grind around and then roll over and make new lows? Hopping into Geo still doing a whole lot of nothing. I'm getting quite bored of holding this trade, to be honest. It's just been sideways, sideways, sideways. I've said multiple times the stop has been moved up to here, so either way, we will walk away with some profit, but I really wanted to see this thing break out, which it just refuses to do so far. Here's XLC as well. I've been pushing this trade for a while, so nothing more to say about that apart from long and strong continue to push. So as ever, things continue to look constructive. Things continue to be best dealt with no emotions, no bias, only marginal expectations and technical analysis to make sure we stay on the right sides of the trade. Kind of expecting a little bit more volatility this week as we've got, like I said, we've got the jobs report coming out on Thursday. We've also got the inflation expectations on Friday. But I think if we can get through the week, then we'll be ready for another big week, no doubt, next week. Every week is a big week these days. But if you found value here today, I'd appreciate it if you could drop a like on the video. Subscribe if you're not already and turn the notifications on if you want to continue to get updates on all my trades in real time for free as a pro swing trader. This includes setups and callouts such as the precious metals one now, weeks in advance. In the meantime, I hope you're doing well in life. Take care from me. All the best. Cheers. Bye.